Hello, let's look at the closing off process. Subsequent to the completion of the review and adjustment process, the financial statements of an entity are prepared for a relevant period. Subsequent to that, attention is paid to the closing off process whereby the accounts for income and expenses and drawings are closed off against the retained earnings as at the reporting date. The closing journals are generated when the financial statements are approved for distribution. The date reflected on the closing journals is the reporting date, which also represents the date on which the journals are posted. There are different methods that can be used to close off the temporal accounts. The first one is the method where all the temporal accounts are closed off against the retained earnings account. All income and expenses and drawings are cluttered in the retained earnings account. The second one, income and expenses are closed off against the profit or loss account. Then thereafter, the profit or loss and the drawings are closed off against their retained earnings account. The third method, sales and cost of sales are closed off against gross profit. Gross profit and other income and expenses except sales and cost of sales close off against your profit or loss account, and then the profit or loss and drawings close off against your retained earnings. Now let's look at this example for the closing off process. We have XYZ entity, current reporting date is 31st of December 2015. And below is an extract from the post-adjustment trial balance. You are given the list of balances there. First one is capital of 300,000, retained earnings 31st of December 2014 from the previous period of 900,000, drawings 15,000 debit balance, sales 250,000 credit balance, rent income credit balance of 70,000, cost of sales debit balance of 100,000, employee benefits 35,000, debit, water and electricity a debit balance of 15,800, and lastly depreciation of 5,000 rands. What you are required to do is to provide a journal entry in the general journal of XYZ entity to close off the income and expenses for 2015 against the profit and loss account, and also to provide the journal entry in the general journal of XYZ to close off the profit or loss account and the drawings account against the retained earnings, and lastly to draw up all the relevant ledger accounts and post all the journals that are mentioned above. First entry, the closing off journal for income and expenses. Firstly, sales and rent income have credit totals. To close them off, you will need to debit the sales and rent income account. Secondly, the expenses, which are cost of sales, employee benefits, water and electricity, and depreciation, have a debit total. To close them off, they need to credit those accounts. The difference between the two sides gives you a profit of 164,200, which goes to your profit or loss account. Number B looks at the closing off journal for profit or loss and the drawings. The profit that was determined on the previous transaction will be closed off to the retained earnings account. The profit or loss account, which was credited previously, will be debited to close off, and then the account that's going to be credited will be the retained earnings, and that will leave us with the drawings account. To close off the drawings, we will debit the retained earnings and credit the drawings account. That's how we close off the temporal accounts. Now let's look at the ledger accounts. Let's start off with them. Sales and rent income. The sales and rent income are income accounts and they have a credit total. To close them off, you will debit the sales and you are going to credit the profit or loss account. If you look into the profit or loss account, you can see that the profit or loss account is credited with sales and rent income. Now let's look at the expenses. The expenses that we'll look at are cost of sales and employee benefits. These two expenses have debit totals. So to close them off, you will need to credit cost of sales and employee benefits expense. With that being said, that means profit and loss account needs to be debited. If you look into the ledger account, you'll see that profit or loss account is debited with both cost of sales and employee benefits expense. The last expenses would be water and electricity and depreciation account. Also, just like cost of sales and employee benefits expenses, have debit balances. So to close them off, you need to credit water and electricity and depreciation account. But the account that needs to be debited will be your profit or loss account. Now, by looking at this, we'll see that the profit or loss account, all the expenses are on the debit side and all the income accounts are on the credit side. All you need to do now is to calculate profit, and it should give us the same profit that we got through the journal. The profit that was made of 164,200 will now be debited against the profit or loss account, and then you're going to credit the retained earnings account. This is just transferring the profit or loss of the entity to the retained earnings account. Then also, drawings account have a debit balance, so to close it off you need to credit, and the account that's going to be debited will be the retained earnings account. Then after that you will need to balance off your retained earnings account as per normal.